All right, hey there, welcome everybody. Christopher Franks with Texas West Capital. It's just a few minutes after 11 a.m. Central Standard Time here on Wednesday, the 2nd of December, 2020. If you celebrate Christmas, guys, you've got about 23 days left. What an end to a pretty crazy year. Try to look at it positively, right? I mean, you're still here, so there's something positive to look at. Remember, guys, however you view the world and daily, sometimes people make jokes and, they're real self-deprecating, whatever. They're like, oh, I'm just kidding. I'm just kidding. But are they really? Are you really? Many times we aren't. And our subconscious takes that into effect. And so, the more grateful you are, the more positive you are, genuinely on a daily basis, the better your outlook is, and the more you notice, it's not that better things come to you, it's just that you notice those things. If you happen to be very down and very negative mindset, you won't notice the opportunities that present themselves. And so that's not just in trading, because you're going to miss those trades that you should be in, but also in life. So make sure you're always working on trying to keep that positivity, all right? Hey there, Satoshi Ray, LG, Chris Day is here, Crypto Mowgli is here as well, Data's here. Good to see you guys. Don't forget, join us, howtotradetowin.com. We've got this whole Black Friday Cyber Week sale thing going on, guys. You just have to come in there, go to the join us, and then, pick whatever you want to pick. You can scroll down the page here. You've got your 3 different tiers here. We offer monthly, quarterly, biannual and annual packages for all 3 tiers now, and depending on which one you buy, you're going to get a greater discount. So right now, for instance, tier 3 is $199 a month. If you get the tier 3 annual package, you're going to end up spending on average about I think it's $99. No, $90. Yeah, it looks like about $90.55. So if you have the ability to purchase, a larger time frame there, as far as membership time there, and you want to join us, that's the way to do it. We've never had these prices like this, and honestly, I'm not sure if we're going to do them this low again next year. But even if we do, it's going to be next Black Friday before you get anything like this again. Jump on in there and get it. You don't have to do any discount or any codes or anything. When you go there and you go to the join us and then you add it to your cart and you go to checkout, on the checkout page where you get to verify everything before you actually pay, it'll list the discount there as well as the final price. If you have any issues with it, guys, software is what it is. Every once in a while some people encounter issues. Just send, DM me over on the server and let me know what's up, and I'll help you out as best I can, all right? So join us over at howtotradetowin.com. We'd love to have you there, guys. That tier 3 is where it's at, I'm telling you now. Let's jump on over and see where we're at. So, what do we have here? Well, so back here on the 1st, which was yesterday, right? Got to keep thinking what day is what here. We were originally looking at this here, actually back here on the 30th of November. So on Monday with Discord, I was looking at the end of the day, Monday, no matter what level you're at, we do the, tier 1, tier 2, tier 3. I do my evening update. And so that evening update, I said, listen, we've probably we had 3 down and 3 up. And I said, we've either got a triangle forming here or a flat. And then I gave them 3 levels to watch on the way down. Price bounced at each one of those levels and reversed at the last one. The last level was 18,110, and it reversed right there at 18,100. And so we did good with that. So we had that down there. We got the bounce back up. At this point here, I do think we've got it down, but there's no guarantee at the moment. So right now, everything else aside, watch and see, does price move up above 19,500? If we get above 19,500, that means we're likely to see it at least get up here to around 2276. Again, that's the whole idea that this is a 4 and we've got basically a 1, 2, 3, 4, and a 5 up there. But it is possible that we've got a 1, 2, 3, 4, and this is an ending diagonal right here. So instead of this being an A and a B and then a C as a expanded flat, it's a 1, 2, 3, 4, 5 ending diagonal, which means this is 1 or A down. Now, if I'm looking at this, based on what we've got going on here, if we're going down, this is a 1, 2. I think instead of this being an A and a B, I think it's probably a 1, 2, 1, 2 on that. But we still have to see price head down. So if we want to, gain some confidence in the idea that this count is correct, what we want to see is this move down below this swing low right here, this 18,335. That'll give us confidence that this is what we're seeing here. Further, decline below that swing low there at around 18,100, 18,110, depending on what exchange you're on, should indicate that it is correct, and that's what we're doing. However, if price reverses prior to this swing low here and pushes above this swing high, this 19.5, again, that's going to suggest that this count is not valid here, and we're heading up here toward at least this level. Now, the other thought is 1, 2, 3, 4, 5. You would have to get an ABC out of this drop here, but then you'd look at this as a 1, 2, and you go for a 3, 4, 5. Now, my problem with that is if we zoom in here, even on the 15-minute here, you can already see it looks like a 1, 2, 3, 4, 5. I mean, there's 5 down. I don't know how we see it differently. If we zoom into the 5-minute, let me see here. 5-minute here, you get a 1, 2, and then you potentially get a 1, 2, 3, 4, 5. So now you have a 1, 2, 3, 4, again 5. So you've got 5 down. So I can't guarantee this is not maybe an A, B, and somehow a C here. But if I look at this, I mean, it looks a lot clearer to be 5. But, again, if it moves above that swing high, that's likely 3 down there, and so we've got the movement up. But what I see here is 5 down. I see A, B, C up. So 1, 2, 3 up. Even within that, you've got a 1, 2, 3, 4, 5. So there's your A, here's your B, then 1, 2, 3, 4, 5. There's your C. So you've got 3 up. We come back over here. Basically you've got a 1, 2, 3, 4, 5. Probably an A, B, C here. 1, 2, 3, 4, 5. A, B, C. 1, 2, 3, 4, 5. So you've got a 1, 2, 3, 4, 5, a diagonal here. This is where my counting is. And then from there, maybe you've got this, A, B, C, or A, B, C, however you want to count that. There's a lot of swings in there, and they seem to, depending on how you count it, it seems to equal, an A, B, C rather than a 5 up. So then we get back over here and just got to figure out what we're doing here. 1, 2, 3, 4, 1, 2, 3, 4, 5. So 1, A, B, C, 2. Working on it again. And so if this is like this, then we're getting this, it won't be accumulation, but it'll be this distributive action going on here. Every time they're trying to buy up, it's getting sold into. And so you get this 1, 2, 1, 2, and that should give you a strong wave 3 down. So we'll continue to wait and see. So for right now, if this count is correct, and we remain below this swing high up here, this local swing high here at this parentheses 2 at about 19,340. If we stay below that, wave 3 generally should be expected to reach, let's see if I can pull this there. There we go. 17,453. Normally wave 4 would get up there around 18,171, and wave 5 would get you down here around 17,008. But your larger 1, 2 here, the minimum, wave 3, the 1618 is down here a little bit lower at 16,565. That's also right there around the S1 pivot. And so generally, everything else aside, if you're dropping through the pivot, you expect to at least target the S1 pivot, and usually you'll get to the S2 pivot, but at least the S1. So there's a confluence in that wave 3 target down here in that S1 pivot. So ultimately, I would be looking for it to at least get down toward this 16,436 to 16,570 area to complete wave 3. But again, if this is a 1, 2, 1, 2, it's possible this becomes a 1, 2, 1, 2 here, which gives you this 3 ends up being much lower overall. But locally right now, we just have to see, do we at least get those targets there? It's possible as well, if we're looking at this, we've got a 19,500 to about a 19,900, so about a $400 difference there. Possible double top here. And so what price needs to do is, before we can even consider that, it's got to drop below this swing low right here, the valley between them, to confirm that possible double top. And if that's so, then your target based on the height of the pattern here, it's going to be about $3,700 below that breakdown there. So you're looking at a target down here of around 12,500, 12,488, right around there, based on that pattern. What does that do in terms of anything else here? You can see that gets you, look at where that gets you actually. They get you right there at that previous swing, which is resistance here as well, resistance right in there. So, it's a logical level to get to if it does something like that. But again, that's only if it gets below that level. We've still got to have follow through with everything and head on down. Let me see here. Chris Day, yeah, you still got a lot of time with us, don't you, man? You loaded up before. Let me see here. Othman, you said you see an ABC with a B as a triangle. Let me see here. So you mean like an A here and then an A, B, C, D, E, and then maybe it come down? Sure, potentially. But again, that comes into how do you count these waves here? Again, it looks like you got a 1, 2, 3, 4, 5. And if you do, this can't be, again, this would be wave A. But, okay, so wave A, so then this would be A, this would have to be B. But if it's, the B wave, it has to just be 3 waves. And you've got pretty prominent 1, 2, 3 lows there. So, I mean, but, again, I'm not, sometimes with Elliott Wave, man, you sit there and you go, man, that is clear as day, 5 waves. And, and you come to find out, no, it's actually 3. It's some weird, you've got some interior small wave in there that's acting up. But, I mean, if I look at this again, even here on the 5 minute, to me, it looks like we got a pretty prominent 1, 2, pretty prominent 3, 4, pretty prominent 5. And so if that's 5 down, it can't be, a wave of a triangle. Yeah, so I mean, just kind of where I'm looking at as far as that goes on there. But we'll see how it continues to play out. Again, no matter, I've got this count on here and I'm showing you what I think's probably going to happen, but, still, the range is this 19.5 down here to this 18.1. And the safest way to play that, I know you guys don't want safe. You want guaranteed. Well, guess what? There are no guarantees in trading. But the safest way you would play this is you would wait to see if price breaks out above 19.5 or dips down below 18.1. The rest of this in here is just interior overlap. See all this overlap here? This is all kind of corrective looking. Which, again, could lead toward, possible, triangle, I guess. If you can get an ABC out of that, but then you'd really have to get 5 waves out of this. And that's where you go, do you say this really tiny 1, 2 here? And then you have to get, you've got to get a correct 5 out of this right here then. Because you do a 1, 2, 3, 4, and then 5 down here. Something like that. But, you definitely want to be careful when price is just kind of trending sideways. You're going to get chopped up left and right, guys. It's really just not worth it for normal, candlestick day trading. It's just not worth it. Let me see here. Hank believes the top is in process. In progress. I think, again, I'm kind of leaning that way as well. But we'll see. We'll see what happens here. But it does feel a lot more toppish. It feels like we're getting more attempts at pushes up that are getting stifled rather than attempts at pushes down that are getting, stopped. It seems we've got a lot more buying into orders maybe. But, again, that's just feeling based on what's going on with the market, on how the market just kind of feels at the moment. But, we don't trade on feelings, right? That's right. Let me see here. Did you make any money? How you feel since you was bearish from 9K? I'm not bearish. Gosh, guys. See, here's the thing. If you think I'm bearish, this is the problem with being a retail trader. Somebody new to trading. You think because somebody talks about possible downside that they're bearish. No, I'm actually quite bullish on Bitcoin. Have I made money? Yes, I've made a lot of money. Why? Because even if you have a larger term outlook, you can still trade along the way. And I think that's something that most new traders just don't get. They can't get out. They just can't get it through their head. They think that if you say anything, that they feel is derogatory about their, asset that they need to rise in price because they don't really know what they're doing, then that makes you this awful person, and they just view you completely different. It's weird. It's weird. Don't do that, guys. Listen to what's being said. I consistently talk about higher and lower targets, just like I'm doing right now. I say, here's what I think's probably going to happen there. But I said, if it goes above this is scrapped and we're probably going up here. There's money. If it drops below here, this is probably correct. There's money. Trade in here, you can try and trade your smaller time frames if you want. But, most of y'all are going to get chopped up beyond recognition doing that. Trading is not about being in constantly. It's about getting in on those higher probability trades. That's what you're looking for as a trader. Let me see here. Let me see here. Hey there, Brian. Good to see you. Hank is saying the top is a process, not the top is in process. Oh, okay. Let me see here. You still think we're in wave 3 if you put a gun to your head and made you use Elliott Wave? Yeah, wave 3 from where, though? You talk about local wave 3? You talk about bigger wave 3? Yeah, there's definitely possibilities. And over in Discord, we talk about them all. And, we continue to watch them as price action develops. Data says the price action when it was near the 20,000 level didn't look like all were selling like crazy. It felt more like, okay, we're going to sell as long as you guys are up here now. Once the move down was triggering stops and it fell from 19,900 down, the seller didn't follow it, looked like. Okay, guys. So it looked like, okay, guys, goodbye until we meet again in a few days where we're going to wait up here for it to sell into you again. That's how it felt. Yeah, that's what I'm kind of thinking. When we're looking at it, you hit that 20,000 kind of area and you get these strong sells consistently up there. And so, price just continues and now it's a little bit lower right now. Now we've got it here and it came down again. Then we got it here. It came down again. I mean, locally we're getting lower highs. We just need to get some fall through with some lower lows. This is what we become, what we begin watching here now. What's going on with that? But yeah, I get that same kind of feeling up in this area. It feels like you're just basically filling shorts. And so if you are, the thing that's important to remember about that is when it goes down, it's going to get your attention. It's going to really just kind of go and just continue to grind down and push down, not grind down, not like slowly. It'll really kind of make its move and keep pushing. If that's what's going on up here. If it's a more macro kind of top. It could, again, right now I'm just talking about smaller pullbacks in the grand scheme of things. But people still ask me, is 2000 still on the table? Sure it is. Sure it is. We've got a potential expanded flat right now. And so, it doesn't, again, it's like I've said before. It's not like I sit here and I guarantee that's what's going to happen. But it's definitely a possibility. So, if you're a trader and you're just blissfully unaware, or you just want to be emotionally bullish and you want to ignore that because it bothers you internally because you bought, especially if you bought closer to where we are right now. Guys, listen, you're not going to remain a trader for very long. You have to be honest and realistic about the possibilities. Being a trader does not mean that you're just bull, blindly bullish all the time. That's why retail traders end out, usually 90 whatever percent of them are out in the first 90 days. They never come back. It's a sad thing because there's a lot of money to be made as a trader. But you absolutely have to be aware of what the possibilities are and the realities of them instead of letting your emotional side, tell you to ignore it. Excuse me. Aramis, what's going on? It says, yesterday you spoke about how sometimes you see, talking about over in Discord, it says sometimes you see what you want to see in charts. Yes. It's and even even if you've been doing it a long time, you can still see it. And the precipice for that, the reason why I talked about that was because, again, what we were looking at here and the possibilities. Kind of what I said this morning, it looks like 5 down here, looks like 3 up. So that tells me if we've got 5 down and 3 up, we should have more downside. But, it looks to me like 5 down, but maybe I'm just, again, sometimes it looks like 5 and it's 3. Maybe this is an A, B, and somehow this is a C here. Or an A, B, and somehow this is a C right here. It's possible, which is why it's important to understand where your invalidation levels are. This is my invalidation level. If this is 5 down and this is 3 up, then price should not advance above this level here. If it does, it means it's most likely heading up, to a new high above this swing high up here. And in which case, we're going to look back at this as a 1, 2, 3, 4 here, and that would give us a minimum wave 5 of 2276. It's just that simple, guys. But most new traders, when they hear me discuss, about these other possibilities that they don't like, they don't actually pay attention to this. They don't understand. Most people, when they look at Elliott Wave, they go, oh, it's all about the projection. No, you get your projection. And to me, Elliott Wave is more about, okay, there's your projection. Now, where are your invalidation and validation levels? To me, that's what it's about. It's that interior, what's going on, not so much the exterior where it's headed. It gives you levels that you can watch and go, okay, well, if it does this, then I know it's going to be most likely doing what I think it's going to do. Or if it goes the other way, then I know, through the other level, then I know I'm off. I'm wrong. And the smart thing for me to do is get out of the trade. That's the great benefit of Elliott Wave if done correctly. But, again, new traders, they hang on the projection and the end result. They say, oh, wave 5 all the way over here. That's what I'm interested in. But Elliott Wave is always about, there's invalidation and validation levels between, because if you get invalidated interior-wise, you're not getting to that target. So if that happens and you kind of move on as a trader, or I move on as a trader, then, I'll get these comments back from retail traders talking about, oh, you were so wrong. It's like, gosh, so we get this a lot. Again, guys, the big thing that you have to understand if you're a new trader is that you have to change your mindset. This idea that there's guarantees in the market is nonsense. It's absolute rubbish. And the longer you continue to believe that BS, the more you're going to lose. Honestly, I'm not going to sugarcoat it, guys. You're going to lose money if you continue to believe that there's guarantees. The most important thing is risk management. Again, if you believe anything else, you are going to lose a lot more money than you will ever make in the market. I've been doing this a long time. I have friends who've been doing it even longer. And the one thing we all agree on, no matter how we look at the charts, is it's risk management that has allowed us to stay in as long as we have. We know for a fact that there's no way we could have been in this, 20 plus years, 30 years for some of them, without adhering to strong risk management. Because the idea is you're going to be wrong, guys. You're a human being. You are inherently fallible by design, guys. You can't possibly know every decision of a decision tree and how it branches out. You can't know the impact of your decision and creates new decisions and all these things along the way. So if you can't know that, well, then the odds are you're going to be wrong more than you're going to be right in life. Not just in the charts, but in life. So hedge against that. Risk management. So how do you deal with that and what's actually happening without having a bias? So, again, it's hard not to have some sort of bias. A bias, guys, is basically just your narrative. It's your belief on where price is going to go for whatever reasons that you have there. And you may or may not be correct. That's why risk management is so important. And risk management begins with understanding where your invalidation and validation levels are. See, retail goes wrong. They start with their position size and enter a trade, and then usually they're like, well, I want to exit up here, so maybe they might have an exit. They rarely have a stop loss. If they do, it's rarely intelligent. It's not. What I mean by that is it's not thought out. It's not properly done. Oftentimes those stop losses end up in supplier demand structures, where the price reverses almost immediately after they get knocked out. So, when you're trading there, as a new trader, you're generally going backwards. You should start with, looking at the chart and saying, well, this is what I'm doing. This is what I think it's going to do. And then from there, you come in and you say, well, at what point do I know that I'm wrong? That's your invalidation level. That's where your stop loss should be. And then from there, you say, my stop loss is this far from my entry. My risk management says I should only lose 1% or, no more than 1% of my portfolio. You don't have to lose 1%, but no more than 1%. And from that, you say, well, here's my entry. Here's my stop loss based on my invalidation level. Here's my 1% of my portfolio would be this much money. So that means if I enter here and price gets there and I lose that much money, that means my position size can only be a certain size or smaller. Again, we're backing into the trade. It's completely opposite of the way retail traders generally trade. They start with the money, with the position size, and then they just kind of half-ass the rest of it, if they even do the rest of it. Usually there's no risk management. There's rarely a stop loss, and in the few instances there is a stop loss, it's very poorly conceived. And this is why you generally lose money. This is why I get questions like, oh, you're so bearish over there, whatever. No, it's your lack of understanding of how to trade. That's what it is. And I don't mean that to be disrespectful. I mean that to be realistic about it. You guys think that the way to make money is to buy right here and sell up here and then short there and long here and then take your profit there and short there again. The likelihood of you getting anywhere near that, even a quarter of the time is very small, guys. Especially if you're new to trading. What you should be, the secret to being a successful trader is locking in profits consistently. But again, you get emotional, you get greedy, you get fearful, you exit when you shouldn't, you enter when you shouldn't, you hold on when you shouldn't, you don't exit when you should, because you think, price is going to continue going up, right here. Like, they held here, maybe they got in down here and they held here and they went down here and they're like, it's going to go up. And you went up here and then boom, drops way down here. So maybe they sell here. So it's good that you get this profit here, but you could have had this profit up here. Instead you lost an extra, $1,000 of profitable movement there. Or let's say you got in right here before this big move up. This happens all the time. People get in right in this area or the breakout here above this. And it goes up there. And instead of taking profits because it's going up parabolic, it's going straight up there like, it's going to keep going. It's going to keep going. And in their mind, they're spending all this money they haven't made yet. And then it tanks right on them. but they don't have a stop loss, so they're good. And it starts picking up again, and here it goes again. They're like, yeah, look, we're even higher now. And maybe they even add in even more there. And all of a sudden, boom, big, huge drop. And it bounces down below their entry. Well, their entry right over here. And many times they've got too large a position size. They're too over leveraged, and that even liquidates them right there. So instead of locking in profits up in here, they end up getting liquidated. All because that emotion got in there and that greed. Instead, if they had just locked in profits anywhere here, they wouldn't have lost that there on this opening. They would add profits up here, at least of this, if not that. So that consistent locking in profits is how you remain a trader, guys. That's it. Doesn't matter what the profits are. It's the fact of consistently locking them in. I know, it blows your mind, right? Completely opposite of what you think, right? But that's the reality of it. Let me see here. Let me kind of catch up with you guys here. Local wave 3 versus a macro wave 3, and what ratio do they relate? Is there a theory? No. They're just, your waves are related to their waves. No, not to the larger waves of the other. I mean, except when you're looking at things like you might get a wave 4 of a larger degree pullback, and then you have your next one up, and then you get a wave 4 of a lesser degree pullback to that same area. Or I'm sorry, a wave 4 of a lesser degree. So let me try this one. Let me see if I can do this real quick. This right here. So, I mean, the only way that your waves really relate to each other outside of their current wave structure. So let's say you've got a 1, 2, 3, 4, and a 5 here, right? Now this right here may just be when you work this up here. I think what I'm trying to say here. So you've got your wave 4. You know what? Let me put on the waves here real quick. This will be a little bit easier because I can throw the lines on them too. There we go. Waves on. There we go. So let's say you've got this kind of move here, right? So this right here could just be, excuse me, 1, 2, 3, 4, 5. Let me see here. Let me get this all set up here. So something like this. This is generally what your waves are going to look like here, all right? So you have this larger degree wave set here. And then in it, you have this smaller degree wave set here. So this is 5 waves of 3. And so this lower degree fourth wave here, usually that area is where this larger degree fourth wave is going to pull back to. So you can have that kind of relationship. But other than that, really, there's no... I think probably what you're looking for, there isn't anything like that. But that's kind of the way your waves may relate to each other outside of their current degree. And oftentimes you can get this large wave 2 pulls back around the wave 4 and then continues up there. So, you'll have your wave 2 pull back to your wave 4 area or heading up. So, I mean, you can do things like that, but I think that's probably as close to what you're looking for as you can get. So, probably isn't anywhere near what you're looking for. Let me see here. Let's see here. Scott, what's going on? He says, it seems most aren't traders. They are investing and gambling their money. Yeah, and that's what it is. I mean, let's be realistic, guys. And, again, I don't say this to hurt your feelings. I say this because for most of y'all, this is going to be true. You come in with these. The reason why you're in here is because you're thinking it's easy to make money and you're going to get rich overnight, basically. I mean, it's, again, guys, I've said this before. I was heavily into Forex before I moved into crypto. I'm still heavily into Forex. My favorite market is the FX markets, the currency markets. But the same type of thing was there that you see with crypto traders now. And that's this idea that you get heavy leverage and you can get these big moves. You can make all this money and it's easy to make money. And they just end up losing because it's not. Trading is simple, but it's not easy. Especially when you have all those emotions that you don't deal with properly, that you may not even notice are showing up and causing you problems. So yeah, most traders are going to come in. They're going to say, "Oh yeah, I'm trading," but really, all they want to do is buy right here and hold. Well, here, look at this. This is what they want to do. This is what you want to do, right? Buy right here and hold way up here, right? And even if you get that opportunity, most of y'all will not hold up there. You're going to try and trade it as it's going up there, and you're going to end up losing that money and more along the way. Because you don't understand how markets work or why, and how to trade effectively. And so, again, you're fighting yourself, guys. I keep telling you, the most difficult thing that you're going to face as a trader is yourself, your emotions, as you're doing that. Common Man says the monthly average all-time high was confirmed in November. Pullback, macro bull market. Could be wrong if it makes sense. Or it does make sense in your opinion. Yeah, sure. Could be. I don't see a whole lot of significance of some highest average close or whatever, or highest monthly close. That doesn't to me, that doesn't mean a whole lot of anything, because here's the reality of it. Here's the reality of it, folks. If you've got an A, B, C, and an A, B, C with a slightly higher high over this, guess what? You've got an expanded flat potentially, and you've got 5 waves coming down below that swing low there. You can get a running flat, which will get you 5 waves and probably get you closer to about, 5,000 or even, we'd have to see what it is. I don't know. What is that level? 61.8 retracement here. It's probably closer to about 9,000. Let's see. Yeah, right here, 9,500. Which, by the way, would fill in the CME gap, in case you're wondering. This pushes up here. Your first thought should be expanded flat. It's rare. It's much more rare for it to be a running flat. But a running flat, you can generally see a 61.8 pullback, 5 waves, and then head up. But if this is, again, if this here is what we've talked about, we've got potentially this A, B, C, and then you have 5 up for A, B, C down for B, 5 up, here, or even a little bit higher up there, whatever it is, goes up a bit higher, gets you a C. Well, all of a sudden, this is just an A, this is just a B, and then you've got your possible C lower down here. And new traders don't want to hear that. They don't want to, because all of a sudden, especially if they just got in up here or whatever, because all of a sudden it's this thought that this is bearish. Again, guys, I don't see this as bearish. I see this as the most bullish thing that could happen. You guys are like, oh no, pushing up here is bullish. No. This coming down here would be the most bullish thing that could happen, because you have an opportunity to trade it down, making money coming up there, and amplify your wealth almost instantly by buying down in these lows for the real run up. So, that's why that would be the most bullish thing that could happen. Even though you want to look at it as bearish because, oh my gosh, it drops from 20,000 down to 2,000 or 1,000 or something. Like I said, I am bullish on Bitcoin. And to me, this would be the absolute best thing that could happen, because you're going to get a lot of the nonsense that's in the market right now out. You guys keep talking about institutional investors. You know what they want? They want this down here. That's what they want. And you all get there and you say, oh, but they're controlling the market. They're the ones pushing it up. Well, if they're the ones controlling the market, that means they own a lot of Bitcoin. And if they own a lot of Bitcoin, again, they don't just buy and hold indefinitely. They're going to try and make the money off that. And so you get to a top and they try to get it toward a bottom. The lower, the better. Because the lower it goes, the more it shakes out. The more of y'all that it gets out of the market and you sell your Bitcoin, which they can buy. Remember, they've got a long time frame preference. You guys, you generally have short time frame preferences, right? It's completely, again, you notice the difference between what you think and what you want and what you do and what the larger players want, think, and do. Your other time frame traders, your large professionals, those are the ones that move the market. You are the liquidity. You're a retail trader. You're the liquidity, guys. My goal with what I do here every day and what we do at Discord is not to just tell you where price is going to go or where I think it's going or whatever. It's really to get you to understand what I just said. That if you're a retail trader, you are the liquidity. So your goal is not to be liquidity. Your goal is to understand what the bigger players, how they act, how they play, how they do. Not the stupid, whales are going to do, whale going to do that. And all this stupid crypto Twitter stuff. But the reality of the situation, what's really going on. The same thing that happens in every other market and has for 100 years. Because if you can understand that, then you can be retail and not be liquidity. You can be not the fuel that moves price. All right? That's the goal. Let me see here. Hey there, Devin. Good to see you. Let me see here. Kimo, what's going on? It says Elliott Wave is a trading system that helps in capital preservation. I could agree with that. Sure. Like I said, for me, it's an understanding of the way in which humans act. Because, again, what we see on the charts here, this is just a representation of human interaction, guys. It's that movement between fear and greed. And humans are quite predictable with that. That doesn't mean you could precisely pick, it's going to top here 3 years later or something like that. Right here to the penny or whatever. But it gives you an idea of the movement and what may be happening. And within that, it gives you invalidation and validation levels. So yeah, especially if you're a new trader and you struggle with, where do I put my stop loss? How do I know if I'm in the wrong way? All these things. I think, Elliott Wave answers all those questions quite well. The problem is most people won't put in the time to properly learn it or to take the time to do it. Guys, you're not going to become this master Elliott Wave technician, overnight. 6 to 12 months just to get really decently comfortable with it. Years to get, really good at it. And even then, you're still going to make lots of mistakes. But what are you doing with your time anyway? If you plan to be investing or trading, for years on out anyway, you got to put forth the work, guys. You got to put forth the effort. If you don't, things are never going to work out for you. Not the way you want them. Let me see here. Hey there, LXT. Good to see you. Let me see here. Just kind of catch up with you guys here. Hey there, Baker. Good to see you, man. Great call on the Euro USD. Grabbed 150 plus pips yesterday. Nice. I love it, man. Yeah. Again, guys, our Euro USD and other trades like that, available to tier 2 and tier 3 members. We did APVO. What the heck was it? APVO, I think is what it was. Last night with our hot takes that I released last night early this morning. Let me see here. Which one was it here? APVO, that's the one. And so it was already up 20% this morning. So good trade right there, to get into. I always forget to kind of post those things. It is what it is. I'm busy. But when I do remember it, I like to post it there. We have so many, guys, we've had so many huge wins over the last few months. I mean, just stupid hundreds of percents. It's in stocks, in crypto, even in Forex, like you said, 150 there on Euro USD yesterday. But most important, guys, it isn't about the targets and everything that I provide. It really is all about kind of helping you to understand the bigger ideas and how to trade effectively and what's going on with the markets. So that way you can come up with your own targets based on the things that make you who you are as a trader investor. Yeah. Let's see here. Hank says, these messages and lessons about how to be a trader is why you should join us. Not for signals or alpha, learn to be a trader. I mean, really, that's what it is, guys. These guys that have been in here for a while, Baker, I think Common Man's been in for a while as well. Data's been in for a while. LXT. These guys, man, they'll tell you everything I do is to help explain, to help our members understand. Because what happens if one day I'm not here? I'm not a spring chicken, guys. What happens if I'm on holiday? Which, Lord knows, I rarely ever do. But what if I am? How do you trade then? What do you do about trades that you may currently be in? So yeah, it's better to learn how to trade. Let's see here. Common Man says, I speculated into pot stocks 3 days ago and made a killing. Yeah, we had a great pot trade. I can't remember which one it was for. I think it was, what is it called? The large cannabis company. God, what is it? ACO or something like that. And I guess we got in there right before Biden and the presidency and whatever. And man, that thing just skyrocketed. That was awesome trade. Again, in a few days there. It's good stuff. And Data says, I can't even count how often I said those words to my mom on the phone in 2018 when I said, yeah, Mom, I screwed up again. No, of course it's not my fault. I'll never do it again. Yeah, that's what we all feel, right? But it's getting to be a trader. You've got to be honest with yourself, and you have to not worry about what the yahoos on crypto Twitter and other social media say. You really can't. I mean, that's another great thing about what we do in Discord, guys. We got a lot of guys with different thoughts and processes. They love explaining and help people understand why they're looking at the way they are. And at the end of the day, they're all so respectful of each other. And I think it's great because it makes people feel okay to be in there. I keep telling you guys, I just do this thing, but it's really our members that make what we do pretty fantastic. Daily here, DXY. So again, with the current count here, as a 1, 2, 3, 4, and a 5 potentially, price cannot drop below 91.04. If it does, that means this count is incorrect. If that happens, I've already mentioned Discord. I don't think I mentioned to you guys yet. Basically, look at the same 1, 2 here. 1, 2. But then instead of A, B, C here, we'd be looking at this as an A, B, potentially a C here. So, you could have a 3 wherever this ends, and then a 4 up, and then a 5 down. The other thought, of course, is A, B, C here. So you get your 3 there, and your 4 up there, and your 5 here. In which case, it could go down lower, potentially to this daily S1 pivot right here at about 90.8, 90.81. The great things about the daily, things I'm excited about it, we're finally back and oversold. Haven't been there since back here in August, but we're down in there. That's what I've been looking for. We've got this multi-month bullish divergence here from back in July to where we are right now. We've got Stochh RSI down here bouncing off, the bottom of oversold here, crossing back up bullishly, trying to get some continuation there. Now, I did point out here, you guys should be watching Santiago Capital, man. A great group of people. But they posted this chart here, and it says that asset managers have boosted their short bets on the US dollar to record levels. Yeah. And so the last time they did that was this right here. This time right here. We're doing it again. with a potential, fifth wave diagonal playing out. Here's the importance of this being a diagonal. Because if this is a diagonal, then when it reverses, when that bottom is in, it will reverse sharply. This is what wedges do. If you've got a wedge, an ascending wedge like this, your price action, as you go in it there, is going to be something like this, and then it's going to be boom, down. It's a sharp retracement, a sharp reversal is what it is. So again, when you're looking at something like we're looking at here, where you've got a potential descending wedge coming on, and again, until this works out, it's just a potential wedge, guys. But you have to have an idea. You have to have an idea of what you're looking at, because that way you've got your invalidation, validation levels, and ideas of what could happen. So you get something like this, and it should shoot back up. And so the thing about that is the dollar, if it shoots back up, it's going to feel that. You're going to feel that in the other assets. So let's say maybe the DXY is pretty close to bottoming here, whether it's here or a little bit further down there, the S1 or something. Okay. Or heck, maybe even the S2. Let's say this is the bottom, okay? So we should expect a sharp reversal off that. If we look in terms of Bitcoin, for instance, we've got all this sideways going around at the top here. A sudden move up like that, the DXY would give you a sudden large drop with Bitcoin as well. Or at least, I assume that's what should happen. I don't see that Bitcoin escapes any kind of response to that. Because when the DXY moves that strongly upward, it creates downward price pressure on the assets. And so, you should expect generally that would happen, with Bitcoin, that it would go down in response. That doesn't mean it goes down to 3,000 or 1,000 or anything like that. But you should expect a sharp move down if you get a sharp move up with the DXY. Again, you had that back there in March. All assets dropped. Gold, silver, stocks, Bitcoin, everything tanked in that March drop, February drop, right? Except for the dollar. Dollar shot through the roof because everybody runs over to the dollar. The problem with this right here is that you are so far off sides. I've talked to this before with people when it comes to being short, for instance, or being long. When you are so far skewed, where you're 80, 90% short or long, the market is, who's left to continue on in that direction? If the market's 80, 90, 95% short, who's left to go short? And that's why you get those large squeezes out of stuff like that. Again, with the DXY, historically, every time it's gotten anywhere near this level or a little bit lower, but this level at least here, prices always rocketed back the other way. So make sure you guys understand that. Don't think, I see a lot on crypto Twitter of just everyday people going, oh man, look at everybody's short. It's going down. It's dying. No. You can be too short or too long in a market. And that's where the strong reversals usually happen. By the way, when asset managers jump on a trend like that and they get to that length, they're usually wrong, just so you know. But anyway, so that's kind of where we are with that. Let me see here. Yeah, like Hank says, stop staring at the chart all day, every day. I'm telling you guys, man, the more you look at the chart, the more you can convince yourself that you're wrong or you're right with what you're doing. You don't want to do that, guys. Don't stare at the chart all day long. It's just going to cause you to make a lot of bad trades. Do I agree that the momentum is strongly up? From where, Othmane? You have to tell me from where. I admit, yes. Does this look bullish coming off here? Sure it does. Sure it does. But we're also almost going vertical here, which tells me we're probably closer to a top than not. Now that doesn't mean it can't go up $3,000 or $4,000 more dollars. But the more vertical we get, the stronger that, and out of nowhere, that surprise drop is going to be. So yeah, definitely. Let's see here. Oh, just kind of catch up with you guys. I got to get ready to go here in a minute. Let me catch up with you. Let's see here. Tell You Ryder says, my goal is not to be someone's liquidity. I'll tell you what, when that becomes your goal and you start getting serious about learning how things happen and why and whatnot, you tend not to be too much of that. Here on the daily, again, moving in between the pivot and the R1. If I'm looking everything else aside, forget the trend up, everything else. If I just see price moving in here between the pivot and the R1, these are my markers. These are what I'm looking at. And locally, I'm looking at this swing high here at 19,915. I'm looking at this swing low right here. It's same candle at 18,109. And what I want to see is on that local one, do we break out? If we break out through the top side of that one, I think we're probably targeting, potentially as high as the R1 up here. And then generally with the way pivots work, we'll see, usually we look to get, when you're moving in sideways, you hit that R1, you pull back, retest the pivot, and then you go up. If price is uber bullish, you'll continue to pull up through the R1. If it drops below this swing low right here, this 18,109 area, then I would look for it to at least target the pivot here. 17,630 or so. And again, generally what you're looking for is you're looking for a bounce there and a continuation up to the R1 pivot, which then usually sets up further upside. However, if it drops down below the pivot, that's not a good sign. That's not bullish at all. And so you look at least at the S1, which here on the daily is around 15,335 or so. Makes sense right here. And potentially, oftentimes the S2, which is down here at, 10,950 or so. If you continue through the S2, then things start getting a bit iffy, because by the time you're hitting that S3, if you're hitting the S3, that usually means you're going to get often all the way down to the S5, occasionally just to the S4, but you're going down further. Same thing with the R3. If you get above the R3, you're usually going to run the pivots, but sometimes you'll stop right here around the R4. But it does mean further upside when you hit that R3. So rejected at the R1 or R2 is a caution and potentially heading down the S1 and or S2. If you're moving beyond that to the R3, usually you're going to go the R4, maybe the R5, through the S3, S4, S5. And that's just the simple way to trade pivots, guys. If you're looking at it. By the way, we do have this this big bit of bearish divergence right here on the daily as well. So further downside, of course, we'll have price target. We would have it that confirming that and heading down there. But again, right now it all comes down to really that swing high up there and this swing low right here. Interior, this swing high, and this swing low. So if you're moving up above this one, you're probably going to head up here at least to that 2276, but you still need to get above this one. If you're dropping down below this level, you're most likely headed, lower toward these lower targets, but you still have to get below this one. So it's like a heads up, a warning that you may be headed up. A warning here that you may be headed down. So, yeah. Common Man says that the buying power of the dollar is going down more than usual. Increases in stock prices look more bullish than they actually are when you think about it. Yeah. Not just stock prices, but anything denominated in the dollar. Yeah. Because it's the amplified effect of the dollar losing value. So it costs more dollars to purchase that same thing. So, that's that price rising. So Bitcoin, everybody wants to believe it's so bullish and whatnot, and it may be. As I said, it does appear to be. But some things that potentially need to be taken into consideration are, the DXY dropping, and that issue in China with having miners having difficulty selling their coins, so they haven't been able to put onto the market where they would normally do it. And so even if you don't want to, consider the China thing there, with the dollar, if this is a product of that dollar drop, which it is partially part of that, then if there's any significant reversal in the dollar where the dollar heads higher, you should expect a reversal in the asset head lower. All right? There's just no two ways about it. I mean, that's kind of what it comes down to. So, he kind of catch up with you guys here. Let me see. Sorry, I'm just kind of catch up with you guys here. The one thing, guys, be careful with pot stocks. The one thing most people don't understand is, like shale oil, they had all this money put into them, but they weren't really producing. So, shale oil, again, we talked about the reason why the U.S. became such a dominant oil player in the world was because of shale oil. But shale is expensive. Shale is the most expensive way to get oil out of the ground. It's the most expensive oil to get out of the ground. It costs more money to do it. But with the free money coming out everywhere, and in private equity, private equity was just giving money away, basically, they were able to do it. So glut of supply on the market because free money around everywhere made it easy to ignore how expensive it was to get oil out of the ground. Pot stocks have had a lot of money put into them, a lot of money put into the companies, but their returns have been abysmal at best. They have done nowhere near what the expectations were. So you have to be careful. You have to understand that when it comes to the pot stocks as well. But yeah, so just something to think about there. Anyway, guys, I'm going to get out of here now. It's after 12. I got to get going. Again, we'd absolutely love for you to join us over here at howtotradetowin.com. The larger the time period that you purchase access for, the greater your discount. If you buy a tier 3 annual package, you'll get it for what averages out to about $90 a month. And again, right now, that's more than 50% off right now. If you just do it monthly, it's $199 a month. So, if it's something you're interested in, something you can afford to do, that would be the way to go, because you're definitely not going to find your ability to get that kind of pricing, for at least a year. But honestly, I'm not even sure we're going to do it this cheap next year. So it is what it is there. But again, great discounts, all price levels. We'd love for you to come join us. You've seen some of our people here. They're great people. They love to talk and chat and learn and share their knowledge and whatnot. Again, there is a reason why most of the people that are with us have been with us for 6 months, a year. We've got lots of members that have been there the entire time we've been around, which is just over 3 years. And so, again, they're not going to continue to pay the prices, if they don't believe there's a value in what they're getting. So to me, that's the best way to look at what maybe, is it worth it or not? But you absolutely have to come in with the idea that you want to learn to trade. If you do that, we can definitely help you. If you come in with this idea that you just want buy and sell signals, you're missing the benefit of what we do. Yeah, you're going to get them, not really buy or sell signals. You're going to get setups and whatnot that have really been really profitable and done great for us. But, yeah. Anyway, guys, listen, you guys have a great day. Y'all take care. Trade safe. Be safe out there. Again, if you do celebrate Christmas, we've got about 23 days left. So make sure you're getting all that taken care of. Try not to be like certain members who wait until the last day to buy their presents. That might be a bit more difficult to do this year with this whole COVID and everything going on. But whatever you guys do, listen, life and whatnot is all about how you look at things. And I don't believe that you can be anywhere near as successful as you have the ability to be as a trader if you don't believe in your ability to do things, to make things happen. I think you absolutely have to believe that you have control over your life and that you're able to do it if you want to really be successful as a trader. Because remember, guys, you're taking these chances on things, and if you don't believe that you control your future, then how can you believe that you're going to do so well in a trade, right? And that just ends up having you not following your plan and losing money and whatnot. So remember, guys, at the end of the day, no matter what the chart looks like, the only thing you control is how much you lose. That's it. There's the secret. So keep working on that risk management. That should be the thing you work on more than anything else. You guys have a great day. We'll be back on Friday at 11 a.m. Central Standard Time. We'll take a look at a lot of different markets, gold, silver, oil, stuff like that, stock market as well. Maybe take a few requests. But you can get all those things on a daily basis if you join us at howtotradetowin.com. We'd love to see you there. Have a great day, guys.